welcome to At the Buzzer. Coach Jay will be out today. He's headed into Chicago if he's not already here. And we have the lovely Anne Marie. Welcome, Anne Marie. How are you doing today?
Thank you so much, Paul. How are you?
A little busy day. The option expiration for me, but doing well. Doing well.
Good.
Just to, I haven't done the introduction yet, so I'll just welcome at the buzzer where we go over today's action in the futures markets, where we have 35 different futures that we can trade. We'll review um, our regular markets, and with Anne Marie, we welcome you to bring in an opportunity in a different market other than our major four. So
Looking forward to it.
I'm I'm Coach Paul. I've been with Topstep for 2 years. I've been involved in the futures trading industry for 4 decades. I'm here to share my experience, some knowledge, and hopefully help you become a better trader. And now, Anne Marie.
Well, my name's Anne Marie Band. I know sometimes my last name is in there, and people go, "How do you say that name?" But it's Band, like rubber band. I have been around Top Step since 2014, and they've always been a great company and a great group of people to work with, and I'm so excited that I get to work with them on some bigger ways. And you know what? This is my second time on At the Buzzer. So it's kind of cool. I'm excited about it.
Well, we're glad you're here. So let's review today. Go over the top percentage movers today. I have to put my glasses on for that one. All right. The biggest percentage down mover was Bitcoin today, down almost 4%. NASDAQ, number two, down 1%. S&P down 0.9%. And gold, no, mine, I think it was cattle down 1.5%. But corn down 1%. Percentage gainers to the upside. Well, obviously crude up 4.1%. Natural gas up 3.15%. Wheat up 2.3%. And the 30-year bond up 1% today. That is our biggest gainers in our news. I'm going to hand that over to you, Anne Marie.
So Paul and I were talking about what big fans of the news we are.
Yes, we
So
did.
today we had a number of things hit the wires. We've got a strengthening of geopolitical tension. My suspicion is this is a bit of tradecraft, but we'll see. And by that I mean I mentioned this on Lunchbox Trading, and what I mean by that is the following: before Israel struck Iran the first time on Thursday, the administration was continually saying, "Hey, Iran, we can still make a deal. We're going towards a deal. Let's make a deal." And I believe that what that caused Iranians to do, not Iranians themselves, because 90% of that country is very westernized and very much against the current regime, but that's neither here nor there. the Iranian government sort of said, no, Israel's not going to do anything without the US backing them. And then, of course, they did. And so I'm suspecting this might be a little bit of that same tradecraft where they're saying, hey, listen, we're definitely going to get involved just to try to push Iran against the wall a little bit. Not sure how that's going to work out. So fingers crossed that we don't have anything that gets stickier there. Nobody wants their loved ones in that kind of disruption. Um, the second thing that's happening that has to do with oil, besides the fact that um, they've bombed some of their oil infrastructure. What we're seeing is that in the Strait of Hormuz, everybody is jamming everybody's signals. So the tankers don't actually know where they are relative to other tankers. And so that's causing a lot of trouble because there is a lot of traffic through the Strait of Hormuz. It's a very small channel of water. And so that really has also done more to disrupt oil. On top of that, we had the president leave the G7 early. I don't know what that's going to do about things. And we've got the FOMC coming tomorrow, and the Fed um, percentage reports, Jack mentioned this morning, that it's about a 99% chance that they don't do anything. And so the question is not will they do anything, will they won't do anything, it's what he says during the presser. And so that's going to be really, really important. On top of that, we have a holiday on Thursday, and then Friday, some of the largest option expirations will no longer be there. And so if those are providing some sort of floor in the market and those get closed out or moved forward, we could see a little bit more acceleration. And so the last thing that's pretty important is from a seasonality perspective, I got to look at some software that tracks seasonality in the last week of June across the last 97 years in the stock market. And 80% of the time, it's less, it fades from the higher 3 weeks. So it doesn't mean that we'll go negative and fall off the rails. It just means that it's a likely liquidation event that's going to be coming, probably precipitated by all of these options getting closed out because it is quad witching. Of course, we normally people say triple witching, but who knows? They're all expiring on Friday. So that's something that could cause quite a bit of intraday volatility. Now, other than that, that's really all we're looking at so far. Tomorrow we've got a little bit of news, but the primary thing is going to be that FOMC meeting. So as we look at the charts today, we have to think about that as a backdrop and just really take a focal point of how can I make sure that I wait on my trades so that I have the least risk when being exposed to a particular position.
Well, thank you. That was an extensive and an important update. Now, we'll talk about the Straits of Hormuz. And for those of you not familiar, a large percent, 20% of the world's oil and natural gas. We had a nice move in natural gas today
Mm-hmm.
too. Go through the Strait of Hormuz, and which is south of Iran through Saudi Arabia, that releases oil to the south and distributed. Um, if that is shut down, that you'll see crude just skyrocket. Um, that's a threat. And then you were talking about jamming. So this is a tight. If you remember, what was it? Was it 2 years ago, or they had that big ship that jammed the Straits of Hormuz? Um, so jamming, and why they're jamming is, I guess, they don't want to be seen as a target.
Well,
Um,
I think the reason that they're jamming is so that they can stop military interception of radio
yeah.
communication. And so they're jamming all of that, and it's throwing off all the sensors that tell them where they are inside of the strait, right? So I put
There,
up a picture of that. I don't know if you, Gabe, can see that right over there. That
yep.
is this little thing right here is the Strait of Hormuz, right there in the center, that tiny little elbow. And that's where they have to travel through. So pretty small space to be sure.
So why don't we, while we talk about oil, why don't we bring up an oil chart? Um, then, is that my chart? Let me change it to oil. All right, we'll start.
This was a pretty big move, but interestingly enough, it still puts it inside of a giant range.
So there we go on the daily. Um, we held yesterday's low, and like you said, we're still inside of yesterday's range. But look at this range from last week. It's the $10 range. We've been talking about. Jay and I
Yep.
have been talking about this. When it breaks out, it's above the 200-day. Interestingly, we have some levels here on a longer term basis. If we, this high of 76.40, our old high, um, looks like we have a chance to go there. Interesting, it will be important tonight. Most of this action is going to happen in U.S. nighttime, as we saw the other night when we exploded up. Was that Sunday night? $9 at one point. But this is curving action. What do I mean by higher lows continuously? Um, I don't think. I mean, if you wanted to get short oil, you get a lot of risk. I mean,
Yep.
um, unless there's some dramatic news that comes out that there's peace in the Middle East. I'm pretty old, and I've
Haven't
never,
seen it yet.
I haven't seen it yet. But the potential for this to get out of control is so big. Um, so looking at that, I'd say we're targeting that 76.50 area. We close above that, we probably will have the news that this war is
It
growing
is moving
larger.
higher on lower volume, though. That's the one
Yeah.
thing we can be hopeful about.
Yes, yeah, it is going lower. Because I don't think anyone, unless you, like I said, who wants to get short the oil unless you're a
Yeah.
hedger?
It might
I,
be all the shorts that are covering here,
yeah,
because there has been a very big short oil event. A lot of commodity traders have been extremely short oil. Um, a lot of them said that the reason they had an oversupply when Kazakhstan was throwing out more oil than they promised they would. And so they oversupplied, but they oversupplied for the Hajj. And the media picked up the story and said, oh, there's going to be more supply in the market. And a ton of new shorts came in. And I think this is a lot of short covering in my estimation, especially since it's moving higher on lower volume and not higher volume. What do you think of that?
Yeah, I see what you mean. That's what I mean. It's like, who's going to be the buyer here? People who are stuck, right? The shorts,
Yeah,
but
yep,
also commercials, end users, because
yeah.
and
They
if,
have to
if
buy it, they're
they,
going to use it.
yeah, they're going to right up. I noticed there's a big um rise in use of crude options.
Oh,
That
really?
option, yeah, which I don't. I could go off a longer discussion, but if I'm a hedger, I much prefer using options in the futures.
I'm
Ha-
not, I haven't had the guts to do futures options yet.
oh,
Um, but
join the.
because I
Come
love
on in,
options so much, all right, I'll jump in. I'll jump in this week.
and so this there as a lot of hedgers. If you don't, what are you hedging? You're hedging your risk in price. If commercials already have that need oil have huge upside risk. Like you mentioned, I'll bring this to a weekly chart. And we've been in this range
I know, years.
years.
Yep.
Um, if I do a trend line from, we've already broke that. This is the next one. On the weekly, I mean, think about, well, you're an old line chartist. What's the next resistance? 86.
Yep. That would be it. Yeah.
So this has
Yeah,
huge
that, I
potential.
mean, listen, if not to get geopolitical again, but if we get oil that stays consistently above that price, it is going to drag down earnings. It's going to really hit emerging markets and Europe really hard. And the reason for that is that if they don't have cheap energy, they can't do anything. I mean, that's the same for us, but they are very energy dependent on others as opposed to being more self sufficient like us. So if I were a betting man, I would I would say this top edge of the expected move. I measured it from the options chains. We put it up on market kickoff. That's $78.60. And so, what a chart has a tendency to do when it breaks these expected moves is it begins to battle there because the traders immediately want to push it inside of the box. And in order to do that, they have to come heavy on the short. If there are too many buyers at the top, they have to turn immediately around and then buy the equity along with holding their options short so they can shift their delta. Meaning, if their short calls on the top and it breaks out of the top, they have to buy the index so that they don't keep losing money through the entire move up. And so we could have ourselves a blow off top. But if I were a betting man, I would say that that would make an absolutely stellar shorting environment in the short term.
In the short term.
Yeah, in the
So,
short term.
all right, let's look in today's half hour and see the action. So, starting last night, I have it framed out. Um, this was the opening half hour last night. That was most of the range.
Yeah.
So you can see this market isn't a runaway market. We sat in this range until New York open at 8 o'clock, and we continued the rally higher. Interesting. Here we go in London. They came in and bought it right on the bottom of the opening range from
Mm-hmm.
US, and then back to US. It rallied again, as we talked about. That there's it's above the 200 bar moving average where we tested yesterday. Um, the only and I'm glad you mentioned the low volume, because the players that are coming in are the players that have to here.
Yes,
Speculators don't have
this
to,
is
but
what I'm thinking. Yes,
yeah,
I agree.
if you don't have coverage, you're what are you going to wait for?
Yeah, you're toast.
So, anything else on the crude oil?
So we can see a pretty big exponential move when it's coming straight up. And I thank you so much, Gabe, for doing all of that motion. This blue line is a zigzag pattern, and it tells you when trend is shifting. So interestingly enough, you'll notice that the blue pattern stops right there on the date of the 16th of June, and it hasn't carried through because now it's gone a little bit sideways and will recapture trend as soon as it breaks above this 7350-ish area. If it holds above there, it's certainly going to try to get to the top of the 7620 and then 7850 or so. I'm not saying, hey, listen, crude is a short. It is a long on the pullback, no doubt about it. But you don't want to get long a breakout. You want to get long a pullback into frontline support. And so for the overnight, if you're thinking about, all right, what is the price action looking like? You can see a bit of a box of price action here where they built a ton of inventory and now they're in a distribution phase, right? Moving up, and now they're settling into another inventory building event. And so my thought would be, if it breaks the top, that 78 7380 area, the first shallow pullback that comes into the region that holds the floor of this formation at 73 is going to give us more upside. But if we break 73, I suspect we fall back into this space. And what we do know is the administration is very keen on keeping oil prices low. They're incredibly concerned about it because they know it's a driver of inflation, and they want Chair Powell and the FOMC committee to um, lower the rates. And if oil continues to climb, there's no way that's going to happen. I'm not sure it's going to happen anyway, but they are pressing for that and would like to use that as an event. And so watch that area at around 83. If it loses it, all that inventory that's here is going to be liquidated, right? And they're going to liquidate into the next line of support and the next area of congestion. If they do it, if they do break to the north, they'll distribute up into the upper edge. But just like Paul said, it's very important to realize that the people with size that are moving here are because they have to move. Otherwise, they intraday trade it, get their 50 contracts in, 50 contracts out, and they're done for the day. So that's definitely something that I am seeing in oil.
All right. So let's move to the NASDAQ. I'll bring up the daily on my chart. Um,
I like that you look at the daily first. I do.
yeah, I always have. Um, Probably because I've been around so long, as that's you really couldn't do. You just looked at the daily, you know, big
There were no
once.
intradays for you to look at.
There was no, unless you did it
Yeah,
by hand. So, but it gives you the idea of the trend. I'm a trend person. I like to trade with the trend. So anything you're seeing here on the daily?
I am. A couple of things. First of all, this is the weekly expected move, this red line here. And we came in, what is today? Wednesday, Tuesday, Monday. Let me get rid of these guys. Hang on. Okay, so we had today, we had Tuesday, we had Monday, the expected move. They came up into it and have now fallen from it. Now remember, the goal of these traders is to jam price in between these weekly edges. And they barely did it. Today, actually, the expected move to the upside was this 22,000-ish area. And
Mhm.
so it had blown past that and is now coming inside of that zone. A lot of those traders probably just eked out a balance there rather than making a profit. And so tomorrow it'll be very interesting to see if they can hold this ledge. If they can hold this ledge, they're going to press up into the expected move again, and another battle's going to ensue. But we've had a low, a higher low, and another higher low. So we've got a compression event that is very likely to give us a blow off top if there are too many shorts up there, or will give us a liquidation event that will pull us into these lower edges near 21,700. That's my thought for the setup tomorrow.
Well, we have FOMC. Like you said, our advice for those of you before the announcement: be flat, trade
Yeah,
after it. Let the let the professionals who have to make markets suffer through that. Um, I was going to say, from whenever there's a big number, um, in in the trading pit, we used to see the locals or the liquidity. They would put their hands down. And what does that mean? In the world today, is there's nothing in the
dome.
box, the
Yeah,
dome. And why is that? They don't want the risk unless they have something they have to get out, some inventory. So if you like to play before and you blow out, understand that is a very high probability it's going to happen. Um,
yeah.
so so what is it? 99% that there's just a chance there's not going to be. There's
Yeah, there's a 99% chance that there's no cut.
all right. So let's play this game. Maybe what happens if they do cut? Is that going to be bullish or bearish? What do you think the reaction, since a 99% chance, and let's just say they cut, why they succumb to pressure from the White House, they see something that no one else is seeing, um, maybe they see crude oil is $3, $4 higher again. What do you think would the reaction would be in the equities?
So, um, I suspect that if it's a spike, then it'll be the blow off top that I'm talking about. So it'd be a spike and then a fade, or a fade and then a spike. So the bottom line is, if you're staring down these charts and you're thinking to yourself, well, okay, what's going on? Go back and look at the average daily range, and then, make sure that you've got a line there so that if it falls through it, it could be further acceleration to the downside. If it falls through it and then recovers, you might have yourself a buying opportunity. I love looking at the average daily range. It's truly fantastic. I like to trade the FOMC numbers, but what I do is I'll use Hoag's term. I put out a wishing number and I say, okay, what's if I look at a weekly chart and I see the absolute low there, I'm going to put an order out because there's a tremendous amount of buying opportunity there. So, for instance, if we take a look at the NQ, we've got my chart here. It's pretty ugly. So, if I were staring this down, and I would not trade the NQ, I would be much more likely to trade the YM or the ES. But if this were here, I would say, all right, I see the weekly expected move to the downside is 21,118. I can see heavy congestion here at these markers near 20,691. I might put one I might put one contract out there. I like to do that simply because the market can be very reflexive when it comes to these kinds of things. Now, I have a hard stop, so it's there, but if you look at something like the YM that's really bounded, these are the expiries for the end of this month. You can clearly see that if this drops to 39,990 or 40,000, I'm fairly sure there are going to be a fair bit of buyers in there because look at the volume candlestick on April the 7th. And that was when the market took the turn. And so I'm going to be looking at that candlestick formation and old support to say, you know what, I'll take that. Now, is it risky? Yes. Do you want to go in with 10 contracts? No. You might want to try a micro, but what you're doing is waiting on potential opportunity that's proven itself out in times past. So, you know, ultimately, I think that Powell is going to dig his heels in, not going to do anything. But you're right. You have to consider the what if and realize that the swings could be fairly dramatic. And catching them, but catching them without slippage, not going to happen. You're going to have a rough time.
Well, I like that explanation because whenever I in my career when everything's 99%, the spark is when something unexpected happens and
Exactly.
being prepared for that. You can have really great opportunities, but being I like what you had a setup. You have a setup for a reaction if it works that way. That is a key. That's a plan versus being emotional and
Yeah.
then being reactive. So to
Yes.
me, if they cut rates by quarter, I think there would be a big move up and then a flush.
Yeah.
For the Fed to
Same.
cut that, they might see something that we don't, but
Yes.
um and these are scenarios. So being prepared for different scenarios and understanding like your plan for that this is what I would do. I've accepted the risk. If this
Yes.
happens, I want to take advantage of it.
Yeah.
So I found it interesting here in NASDAQ. We're sitting right near the 20-day moving average. We're right at it. Um, that was today's low. Um, and
On the
the
daily?
20-day it was right
Interesting.
there. It's close. But
Okay.
we're holding it and we've been climbing it on it for a month, 2 months now. What is a month?
Now, would
But
you say that the lower volume is not concerning because we're in a rollover period?
I think that too, because these aren't, it's funny, these are not um, continuation charts.
Right. With
Now,
the
if it was a
individual contract. Yep.
continuation chart, it would add that. So, but overall, I have a continuation chart here, and it's average volume, lower than, it's not great volume,
Yeah.
but it is June.
Yeah.
There is, in June, the summer months are usually less volume. Sell in
Yes.
May,
They're in
go
the
away
Hamptons.
in the Hamptons. But do computers take? I've heard that now. But do computers take a vacation? Because most of it is done by computers. So, um, what I find
Big
interesting is that,
positioning is usually the manager, though, right?
yeah,
You see 1,000
yeah.
light up on there or 500 lots light up on there. You know it's a manager that's doing that.
But the thing, the 20-day moving average is flattening out. So
Hmm.
tomorrow, for me, for as a trend trader, if we close below that 20, this we're probably going to go down to the 200 rather quick.
What
Um,
is the green line?
that's the 200-day moving
200. And
average.
then the yellow line?
Way down there, that's VWAP from the low
Ah,
of the
okay.
move,
Okay.
which and there's an
And an
underneath
unfilled
just
gap.
and an unfilled gap. Yep.
Yeah.
But first, I see that this has been a great move to the upside. Um, and it's starting to slow down. Any kind of surprise, a war breaking out that gets out of control with a big jump, and crude oil just made new highs as we were speaking. Um, and I use that as a gauge whether this trend is worn out. So
Hmm.
tomorrow, if there is a, a spark, it'll come off of FOMC overnight, war. Um, so I'm looking at that very closely. All right. Any other equity market you want to look at?
Let's look at Bitcoin. So, something very interesting is going on in Bitcoin. I actually positioned myself for a long and immediately got kicked in the head with an iron boot. So, I
Wow,
I
that
see. Oh
sounds
yeah,
painful.
yeah. I should have had smaller size, but it wasn't overly dramatic. But I wasn't very happy that it happened like that. So we are seeing a fair bit of liquidation in Bitcoin after this huge move up from 78, right? 76,300. That's the April 7 move. It looks a bit like a double top to me. It's still carrying a fair bit of momentum, but today it's really dancing with support at this 104,405. My thought is the following: it is still inside of yesterday's trading range. Okay, so we have to pay attention to that entire thing. And we can see the traders trying to come in off of the floor at 103,250. That was the daily expected move for the formation. And it came right into it and is bouncing. So the question is, what is this going to look like to short? And my thought is the following: because we have one, two, three, four, five wicks that were essentially selling wicks, right? We have buying wicks below, but we have these selling wicks above that are giving us lower highs. My suspicion is any kind of bounce here in Bitcoin is probably going to lead to a little bit more selling, but this giant candlestick of the May the 19th is where all these participants are trapped. And so they'd like to stay in the range because the weekly expected move below gives the short puts and the short calls room to collect all their premium. And so we could easily chop around. My thought is the following: if it comes into 103, for 103,450 or whatever, I would go to the 15-minute chart and I would look for holding a floor just like this, failing to hold lower, bounces into resistance just like it did here, but pulls back and doesn't break this low. If it breaks the low, you have to wait until it recovers that higher low so it can make a little bit of a head and shoulders pattern, inverted head and shoulders pattern. And then there's the potential to go long. If it loses the floor at 103,715, I see more downside action into this chart, and there is a fair bit of liquidation going on. One, before the end of the options move. Two, people taking profit and being just concerned about the market in general. They're moving a little bit to a risk off space in Bitcoin, but at the same time, it's still sitting inside of the range of that massive candlestick. So at the end of the day, we really have a formation that's clear as mud. And so what we want to do is just make sure, my chart's frozen. Um, just make sure that what we're seeing is real opportunity and not just chasing, because we could have pretty volatile moves over the next couple of days. And if you chase, you're going to widen your risk, likely put yourself on the opposite side of intraday trend, and really get yourself in a pickle. So zoom out because it's very noisy inside, and then choose the edges, because even if you're wrong, the edges are going to give you the smallest amount of risk. And that's really all you care about if you want to keep your account balance trending upward.
Okay. I also was bullish. I took a loss today in Bitcoin. Um, Showing here on the daily. Um, get my real chart up. All right. So on this daily, we under the 20-day
I'm
moving
still
average
seeing the
also.
NQ.
Yeah, what? Hitting the wrong. Okay, here we go. MBT. Too many charts open. All right. So we've, as you pointed out, we're basically going sideways. So we found
Yes.
balance here. Um, I bought it yesterday based on the half hour being over the 200. We had that move last night, closed below it. I took my loss, and then I just not expecting this type of a
Yeah,
move to
I was
the
not
downside.
expecting that either.
My crypto kids, as I call them, who have trained trading for many years, and I mean, there's talk that Iran might have a large amount of Bitcoin,
Interesting.
which would make sense since they've been frozen out of a lot of financial markets. Um, Whether that's true or not, I didn't get an email from anyone, but I've found it very interesting that Bitcoin is and Coach Jay and I have been talking about this a long time, is kind of tied as an equity almost. It's because it's become institutional. But we've been finding with noticing it doesn't act as a store or like a flight to quality. It can in April, it was the most calm while other markets were exploding with volatility. It was pretty stable. But today, I would have thought with this world tension that Bitcoin, from a fundamental point of view, would go up. So that talk that Iran was liquidating some of their Bitcoin actually it made some kind of sense to me. Like, why would it go down? And it went down. It was our biggest percentage mover to the downside. So, um, going forward on a daily basis, under the 200, this, excuse me, under the 20
Yeah,
day moving average. I mean, I could think we're going to go test
yeah,
100,000 again.
same, same.
So,
I think it's going to pull in. I think it's going to pull in for sure.
next market we haven't covered is gold. Um, I'll start with a daily. We've been watching this blow off top.
Yeah, it looks a little toppy for sure.
And I saw that Citigroup put out a statement that demand in for gold has been declining. Well, we can see from this chart,
I wonder
it's
if they
def-
said that just so they could buy some.
that was my immediate thought. Oh, you're short, are you?
We've
um,
been around for a while. That's exactly right.
where are the customers' yachts? It's an old book. If you ever get a chance, I mean, it's over 100 years old. And the title is "Where Are the Customers' Yachts?" Um, so I put up a fib retracement here, this rainbow. Um, and I notice here at the 78% retracement, cannot close above that. We've
Yeah.
hit it now one, two, three, four times. While we're still above the 20-day and the 50, well above the 200. Um, I would have thought missiles flying and, and actual U.S. getting involved in a war, that gold would be skyrocketing. So
Yeah, so that begs the question, why why do we think it isn't? I mean, what's your thought?
it's because it's already owned. If it was cheap, and it's not cheap,
Yeah.
we're still near all-time highs.
Hmm.
Um, then there would be, I think there would be more movement to the upside, but it's already owned.
Yeah.
Um,
That's a fair assessment. I would agree with that.
um, and Citigroup is getting short again. No, seriously, I think it's already owned. Um, and I know I took a little ding last night buying it. Um, and boy, did it. And let's look at the half hour. So last night, first half an hour, we had a little rally off the 200. Jay and I were talking about this yesterday, and we had a good rally. There was talk, Trump left the G7
Seven,
on a
yeah, he left
mysterious,
early.
but there was heightened crude oil was rallying. But technically, I bought this when we closed above. VWAP left the range. I put in a stop at lows, and I got filled $5 worse than my stop. It was that brutal. And now it was this break here on this volume. It was
Whoa.
it, it doesn't do it justice. It happened like in 2 minutes, only to bounce back. And I found that, you know, if I'm a longer term owner of gold and we're going in the sideways motion and we're seeing that, to me that reflects some liquidation. Like it's
Yeah.
not it's not acting well. It's
Yeah.
losing momentum. It needs to get going. It spent a lot of time here. Um, so look at today's action was very constrained.
Hmm.
Um,
It was. I think they're getting ready to have another pretty solid move. And we know the gold does that, right? It moves savagely and then it sits around and consolidates. And then all of a sudden, poof, it does something else. And so we're in this consolidation space. And you know, it doesn't look great, but there's really no clear. I mean, if it were me and I were setting up for the next gold trade, I would look at this box right around here and see that, we had inventory accumulation here. They thought it would move back up into the inventory accumulation space, and instead we had liquidation into the prior accumulation area, which is, right around here. And that's essentially where we'd been sitting. And so if we can get a 1 hour candle close underneath, what number is this? 3390. We can get a candle close under there. Any spike should give us another selling pressure event. Most of the volume for the last couple of days has been selling volume. The buying volume has been very shallow. The selling volume has been very steep. So that's something else that adds to your premise that, this is going to fade a bit more.
yeah. So with that, we have a couple minutes left here. Is there anything you'd like to review or looking into tomorrow? Some advice for our audience?
So we've talked a lot about the types of setups that I like to use around FOMC with volatility. I do like to use the wishing orders, but my risk is carefully managed, and I have decided before the trading day where those edges are. I'm not responding to candlestick movement. I'm responding to price levels and how the traders have behaved in the past at those price levels relative to trend. So if we see a really solid bounce up into this 3429 area, or they try to get there, they only get to 3424 and it rotates, begins to lose that level, I will try a short there and then add to the position. If geopolitical risk runs amok overnight or into the coming days, it's going to blow right past that, rip me to shreds if I don't have my risk allotted, and it will run to the top of the last area of consolidation because that's what the instrument does. That's what most instruments do. So keep your risk light and tight in terms of saying, hey, I'm not going to trade big size. I'm really going to watch the markets and use, I have a little box thing that I use. I just look at the chart every single day and I go, all right, I'm coming in here. I'll look at my hourlies because it helps me to think through things a little more slowly. And I will literally draw a box around the area that the price action has been trapped in. And I will say, okay, well, it's trapped for now. If I come down here and I begin to bounce, I'm going to take a long, I'm going to have a nice tight stop right underneath these wicks, If it stops me out, it turns around and it runs back up, and my momentum keeps climbing, I will get back in again and trade it to the top of the box. Same thing. If I get to the top of the box, it starts rejecting it. I will take the short, run it into the middle of the box, take half my profit, leave the stop where it is before, and then just run it into the bottom of the box, and wherever it goes, it goes. But I am extremely structured about what I think the chart is likely to do. And if it doesn't do what I think it's going to do, rather than turning around and going in the other direction, I have to step back and go, wait, what did I not see? What kind of market generated information did I not take on board and say, if I had to do this all over again, what would I do? And if it does change direction, then I want to wait for a bounce that pulls back to a higher low that I can take it long, or a fade that pulls up into a lower high so that I can continue short. It's very important to structure your process, or you're going to get ripped to ribbons.
Great advice. So my final thing is plan your trade your plan. At, in the crux of that is the most important thing: manage your account. Don't manage the market. So thank
Oh,
you.
fabulous. Thank
Thank
you.
you. And
Thanks, everybody, for
we'll,
joining.
we'll do this again tomorrow.
Yep, we sure will.
All right. So, to our audience, good luck tomorrow, good trading, and we'll be back again tomorrow afternoon. Bye.